Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, I'll cover the trade that we set up here in Oracle. Now, I know that the Oracle numbers are out, so if you're hearing this after the fact and weren't in the chat room today, you won't be able to play this binary event. But I want to discuss it with you from a strategy point of view, and because Broadcom is set to report tomorrow, and I think you can take this exact same setup and move it into that earnings report that's going to be due out Thursday after the close. So we've got some levels noted here, and I just always like to make a mark at where the stock closes before earnings are reported. So I have that at 220. Granted, we closed just a few dollars above that, but from that 220, you can start to set up the expected ranges, right? By looking at the money straddle, you can start to get a feel for what option markets are pricing in. And they were looking at about a $20 move. So at the prices we're trading at right now, you can see 209 is the current bid. So at least in this moment, we are staying inside the expected range. Now, I was playing this for a little bit more of a bullish outcome, but by diversifying my strategies, I give myself a few ways to make money, and this is kind of how that idea looks. Now, at these exact prices, you've got to remember that a lot of this will change tomorrow, right? Because you will get the volatility crush. Of course, there will still be a couple of days of life left. It's not like trading them from Thursday into Friday. So there will still be some of that time premium. But this was the shot that I took to the call side. This is just your standard $10 wide call fly. But then in an effort to try and pay for that, I enjoy doing 1x3x2 unbalanced butterflies on the put side. At the heart of these ideas, you're selling premium, right? It's the idea that the puts are kind of juiced up and you're trying to take in a credit with those to help pay for this upper end. Now, when it opens up, and say this actually moves down a little bit further, see right now, you're kind of, still within the expected range, but 200 is this big psychological price point and an area that I believe that these will still pay off, right? So, make $3 or $4 depending on exactly where it opens, but that helps pay for that one on the upper end. And then you can take this idea and I think do exactly the same thing with Broadcom tomorrow, right? So when we look at this, you've got an expected move that's closer to $30. So if I was to sketch that out with you right here, let's just say that we use basically the exact same principles. Well, then I would take the expected move and add it to where we're trading. So let's just say that's about 440. And I would buy the deep and wide 1 month 4-strike butterfly. As the way these strikes are currently listed, that will land us with a $10 wide fly, and that is your bullish upside bet. Then you come down here and do the unbalanced on the put side. So let's say that we move this to the lower end, and the lower end of support should be about 380. Here, I will buy the deep and wide 1 month 2-strike unbalanced because I like keeping these a little bit more narrow because there are more risk involved. But see that going for about a 70-cent credit? If we take that and move it over here into the analysis, the risk profile, you see how you make money on this all the way up. Anywhere the stock goes up would be okay. Then if it's down the expected move, that's actually where it does the best. And if Broadcom trades under, you still have risk definition. So this is just the put side of this. Again, this is the credit transaction in an effort to pay for anything that you want to do on the call side. And then you work to get yourself into a risk graph that looks a lot like this. So I just think that's a great way of moving into these binary events with risk definition. And then of course, remembering you can trade this just in the opposite way if you prefer. If you are a little bit more bearish on Broadcom earnings, then do the standard butterfly down here to the put side, do the unbalanced on the call side, and whichever way you decide to take it, at least you're approaching it from a short volatility standpoint, and I think that's the best way to approach earnings. So I appreciate your time. I hope you found something helpful inside that. Have a great rest of your night. We'll see you in the room tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.